I'm reading from within RESPA about the GFE and the content of the GFE. I'm on page 254 of the Reference Guide to Regulatory Compliance. Under Regulation X, Reg Z, a lender must provide an estimate of the amount or range for every settlement cost the borrower is likely to incur. Estimates must be based on experience in the area in which the mortgage property is located and must bear a reasonable relationship to the charge the borrower is likely to be required to pay. The lender must show fees paid to affiliated and independent settlement service providers on no-cost loans, and must include all applicable costs that will be listed on the HUD-1 or HUD-1A, including the owner's title insurance, even if paid by the seller. Loan information must be included. Payments must reflect only principal, interest, and mortgage insurance. Discretionary amounts may not be included. The initial loan amount must include only the principal of the loan. If the originator allows the applicant to shop for third-party services, the originator must provide a list of possible servicers at the time of the GFE. All broker and origination charges must be included as origination charges. The originator must complete at least the left column in the trade-off table. Other columns are completed at the option of the originator. Allowable tolerances on GFE information. Zero tolerance. The amount disclosed for the following on the GFE may not change before consummation, and that's the origination charge, the transfer taxes, and if the interest rate is locked, the credit or charge for the interest rate chosen, and the adjusted origination charge. However, there is a 10% tolerance for the sum of the following charges, not increasing beyond 10% on the disclosure on the HUD from that which is disclosed on the GFE. These charges include lender-required settlement services where the lender selects the service provider, and lender-required services, title services, and required title insurance, and owner's title insurance when the borrower uses a settlement service provider identified by the loan originator. Title services include any service involved in the provision of the title insurance and the processing and administrative functions required to fulfill these services. It also includes the services of conducting a settlement. And lastly, government recording charges. However, there are unlimited changes allowed to the amounts for all other charges between the issuance of the GFE and loan consummation. Changes to the GFE must be within the allowable tolerances unless the loan originator provides a new GFE to the applicant within 3 business days from the time that changed circumstances affected settlement costs cause the amount of a fee or change, or within 3 days from the time that changed circumstances affecting the borrower caused the loan costs to change. Borrower requested changes. Lenders must provide a new GFE within 3 business days from the date the GFE information changes as a result of borrower requested changes. The revised GFE may increase charges for services only to the extent that the borrower requested changes actually resulted in higher charges. A record of the reasons for the changed circumstance must be retained by the loan originator for 3 years. Changed circumstances include acts of God, wars, disasters, or other emergencies. Information particular to the borrower or the transaction was found to be inaccurate after the provision of the GFE. New information particular to the borrower or the transaction was not relied upon and providing the GFE, or other circumstances particular to the borrower or the transaction, including boundary disputes, the need for flood insurance, or environmental problems. I don't see in here basically like a cost analysis coming from the title company, or let's just say the preliminary HUD coming from the title company quoting charges differently. But one would hope that that would be a change in circumstance. If the borrower went with their own title company and the title company provided a HUD that was different than that was originally disclosed, but nevertheless, changed circumstances do not include the borrower name, income, property address, estimate of the property value, amount of the loan sought, or any information provided in a credit report that was obtained before the issuance of the GFE unless it was found to be inaccurate after the issuance of the GFE or market fluctuations by themselves. When issuing a new GFE due to changed circumstances, the originator may change only those fees affected by the changed circumstance. Other fees must remain the same. Lenders and mortgage brokers are not permitted to charge a fee for the preparation of a GFE, nor may a lender charge any fee before the delivery of a GFE except for a reasonable fee for a credit report. Additional fees may be charged once the GFE has been given and the applicant indicates its intention to continue with the application. Lenders and mortgage brokers may not require that the applicant verify application information prior to the issuance of a GFE, except for the following. Estimates provided on the GFE must be available for at least 10 days from the date of the GFE was delivered, and those exceptions are here: the interest rate, fees, and charges dependent upon the interest rate. If the borrower does not express an interest in continuing with the loan application after the expiration of 10 business days after receiving the GFE, the loan originator is no longer bound by the GFE. Interest rate changes. Oh my goodness, I just scrolled so far up. I was just looking to see exactly what list I was reading from here. I think changes in circumstances, actually. A list of viable ones. I'm just double checking on that. We were in content, and then we were reading about allowable tolerances on GFE information. I think I'm still discussing just odds and ends about the good faith estimate. So another odds and end about the good faith estimate is interest rate charges. If an interest rate is not locked, or if a locked rate expires, the charge for the rate, the origination fee, and any other charge related to the interest rate may change. A new GFE must be provided and all other charges must remain the same. New home purchases under general GFE notes here is that in the case of a new home purchase where the settlement is expected to occur more than 60 days from the time the GFE is issued, the lender may provide a clear and conspicuous statement to the borrower with the GFE that states that the lender may issue a revised GFE up to 60 days before loan closing. If this statement is not provided, a new GFE may not be issued unless there are changed circumstances as defined in Reg X. Okay, service providers, according to the HUD issued questions and answers, if a lender allows the borrower to shop for service providers, the lender must give the applicant a list along with the GFE. The borrower does not have to choose a provider from the list. And if the borrower chooses a provider that is not on the list, the tolerances do not apply. So, I'm going to reread this one part about service providers. It's saying that if the lender allows the borrower to shop for service providers, the lender must give the applicant a list along with the GFE. The borrower does not have to choose a provider from the list, and if they do, the tolerances do not apply. But here's the question that I'm having is, what needs to be on the list? So I can be a lender that allows the borrower to shop for one of two service providers, but then what has to be on the list? Just those two, or all the service providers or any service providers that we feel like putting on a list. Perhaps there's some official staff commentary in another section I can review. For curing violations, a violation of this section is deemed a violation of RESPA Section 5. A loan originator may cure a violation of the tolerance requirements by reimbursing the amount by which the charges exceed the tolerance within 30 days from settlement. So there really needs to be a second review, quality control review, after these loans are closed. Affiliated business arrangement disclosures is another requirement under RESPA. The coverage is for referrals made by the lender to a service provider that is an affiliate or in which the lender has an ownership interest of more than 1% in connection with a federally related mortgage transaction. 1%. Wow. The timing of the affiliated business arrangement disclosure is going to be with the GFE or at the time of the referral. The content of the affiliated business arrangement disclosure is 1, the nature of the relationship, including the ownership and financial interest; 2, the estimated charge or range of costs generally made by the provider; and 3, a space for the applicant to acknowledge the receipt of the affiliated business arrangement disclosure. Special information booklets required under RESPA are only required for first lien, purchase money loan applications, and are not required for refinancing or closed-end consumer purpose loans to be secured by a subordinate lien, not required for reverse mortgages or open-end credit where the lender provides a borrower with a copy of the home equity lines of credit brochure required by Reg Z, and applications denied within 3 business days from receipt of the application. Timing of the special information booklets is that they may be delivered or mailed to the applicant within 3 business days of receiving the application, and within content they must be in the form prescribed by HUD. And lastly, if a mortgage broker is used, the broker, not the lender, is responsible for delivering the booklet. HUD 1 and HUD 1A settlement statements under RESPA coverage means that HUDs are required, or settlement sheets are required, for all federally related mortgage loans except open-end lines of credit covered by Reg Z. The HUD may be used as an alternative. The HUD 1A may be used as an alternative to a HUD 1 if there is no seller involved in the transaction. The timing of the HUD 1 or HUD 1A must be given to the borrower, seller, and lender as applicable at or before the closing of a federally related mortgage loan at the request of the borrower. The settlement sheet must be available 1 day in advance of closing for inspection. The lender must retain each completed HUD statement and related documents for 5 years after settlement unless the lender does not service the loan. Contents of the settlement sheet is statement is that 1 must be completed to itemize all charges paid by the buyer and seller. 2 must be completed according to the instructions of Appendix A of Reg X. 3, each third-party charge must be separately itemized except for charges paid to the loan originator or loan origination services. 4, all loan origination services conducted on the behalf of the loan originator must be included in the loan originator's own charges, and all administrative and processing charges related to title services must be included in the title underwriter or title agent's own charges. Other title-related charges must be separately itemized. The use of average charge is something that has 3 points here that I may have to get into at another time. I'll try here. If an average charge is used, it must be no more than the average amount paid by one settlement service provider to another for a particular class of RESPA-covered transaction. B, the class of transactions must be defined using a type of loan, a period of time, or a geographic area. And C, the same charge must be used for every transaction in its class.